This conference will now be recorded.
Well, good morning, everybody, and Happy New Year to you all. I hope you have all a very good, prosperous, and peaceful new year. There's a lot going on in the world, and hopefully everything will get sorted fairly soon. As usual, we have to have our usual disclaimer. So the following presentation is produced for general guidance only, and professional advice should always be sought before any transaction is undertaken. Individual circumstances can vary, and therefore no responsibility can be accepted by Harts Limited or any of their affiliates for any action taken or any decision made to refrain from action by attendees of this presentation. Again, this is meant to be very interactive. If you've got any questions, please feel free to unmute yourself or stick your question into the chat box. If you want a link to the presentation on our YouTube channel, because this session is being recorded, then just drop me an email in the chat box and I can send you the link later on today. We have plenty of online resources. Please go to our website, harts-ltd.com. There's loads on there. And see our events page for further details of future events. We have our business club lunch, which is always very well attended. I think we had about 60 people to that at the last one just before Christmas. The next one is going to be in March. Please feel free to log on and join us for that. It's a great lunch and networking session. Also follow us on LinkedIn. It'd be great if we can get our followers up. So go to Harts Limited and just click on follow. We're also on YouTube. Subscribe to us on YouTube. So every time we do a new video, and there are a load of new videos coming out fairly shortly, you'll be notified of them. They're all short, 2 or 3 minute videos on various topics. And again, you'll be notified if you've missed one of these webinars. You'll be able to go back and watch it and pause it and do whatever you want with it. Follow us on X, formerly Twitter, at Harts Accountants, and also on Spotify as Harts Accountants. We've got some great podcasts on there as well. Excuse me. The next webinar we've obviously got today. The new schedule is going to be published soon. We do have our budgets webinar in March as well, because the budget has now been announced. But go to our events page and you'll be able to pick up all the details from that as well. We usually start off with an update, and there's a fair bit going on just at the moment. Nudge letters regarding mortgage interest on property rentals from HMRC. They've been sending out these letters because people have been claiming the wrong amount of mortgage interest. As you know, it's now restricted to the amount you can claim if you're operating as a sole trader, not through a limited company, and people have been putting the wrong amounts on the returns, so they're sending out these letters to say, well, have you checked to make sure you've got the right amount going in there. It's also self-assessment time, as if you didn't know. We've got the deadline coming up on 31st of January. If you haven't done your return yet, now is the time to do it. A load of people did theirs on Christmas Day and New Year's Day, but it'll be interesting to see how many more there are left to do. We have our pre-election budget day in March. Rishi has also already announced that he's going to have a budget in the second half of this year. So this is probably the last budget before the election. So I imagine there's going to be a bit of electioneering going on in there. So watch this space. We'll be giving you all the details and the ins and outs come March. And I think we have set our budget webinar for March 12th. So make a date in your diary. The actual budget day, I think, is a week before that. And you also might want to consider a change of government in your plans going forward. Have a think about how it might affect you if there is a change in government, if Labour do get in, how potentially may that affect your business. We're happy to have a chat with you as well. We also have a number of planning sessions available. So if you're thinking about what to do with your business, where to go, you want a chance to work on your business rather than in your business, then please give us a call. We have a great planning session available for you. And if you want to join us on that, just drop me an email and we can set something up for you. There is actually an ebook on our website which says take a fresh look at your business. You can download that for free and it tells you all about how we work with you. There's also been a recent HMRC update on selling goods on eBay, Etsy, Vinted, etc. Basically, the rules haven't changed. It's just that the HMRC are now publicising this more widely. If you have trading income of less than £1,000, you're fine, and nothing has changed with that. And if you're selling your own goods and you're just clearing out your house and you're selling off unwanted stuff, then again, that's fine. That's not trading. But if you are trading on any of these websites and trading platforms and your turnover is more than £1,000, then you need to declare this to HMRC. And very recently, HMRC have sent over 8,000 letters to people who think they might have sold cryptocurrency and not declared any gains. So if you have sold cryptocurrency, and Bitcoin has grown, has increased in value significantly recently, then you may well have sold some. You need to declare that as a gain, but you need to take some professional advice on that. So bear that in mind if you are dealing in cryptocurrency. Okay, that's enough of the update. Let's have a look about selling your business. So what I want to cover this morning is, and very briefly on these topics because time is actually quite limited, but why do you want to sell? Is now the right time to sell your business? Or who are you going to be selling your business to? Preparing the business for sale, have a look at valuations, have a look how you market your business. What is due diligence? We hear the term a lot. How much does the whole process cost? What's the tax implications? And then what's going to happen next? So we'll try and cover as much as that as we can in the time that we've actually got available. So to start off with, it's all in the preparation. Preparation, preparation, preparation. If you're looking to sell your business in the next couple of years, you need to look about starting to prepare for it about now. It's going to take you that long to get it in a position in which you think it's ready for sale. So you need to tidy up the business. Bear in mind, this is a one-off transaction. You can only actually sell your business once. Remember the old Sky advert, it's only live once. Well, very much the same applies to here. You can only actually sell your business once. Once you've done it, you've done it. That's it. So you get one chance at this to actually sell it and get the maximum value out of it that you can. So it's all in the preparation. There may be a whole load of reasons about why you do want to sell. Some people are coming up to retirement and they may be coming up to retirement age or want to retire early and they say, right, I've had enough. I want to sell my business and I'm retiring and that's it. It may be that you want to do something different. You've had enough. You've worked hard, you've got to where you want to be, and you thought, right, I just want to do something different for the rest of my life. So you want to sell your business. There might be health reasons for wanting to sell your business. You might want to bring in other family members. So you start selling your business to family members, to your sons, daughters, whatever. It may be you just need the money and you want the money out, and that's another reason for selling. Or it could be a whole host of other reasons, or a combination of all of those that we've mentioned. So there can be a lot of reasons why you actually want to sell. We also need to think about, is the right time to sell your business now or in a year or so's time? It's actually quite a crucial factor. Have a look at market conditions. Are the market conditions right for you to sell your business now? We've seen quite a bit of mergers and acquisitions going on over the last couple of years. During COVID, people kind of built up cash in the businesses. Some of the bigger businesses built up their cash, and then now they're looking to spend it. We've dealt with quite a few sales of businesses in the last couple of years. So we're seeing that it's potentially a decent time to sell. But again, it all depends on the sort of business that you've got and whether it's the right time for you. So have a look at the market conditions for your particular business. Have a look at your profitability. Has your profitability been declining over the last couple of years? Is that going to put a buyer off? So you might want to consider that. Is there any way you can improve your profitability over the next year or two to get a maximum value out for your sale? Have a look at the products that you've got, and do your products have a shelf life? Are they coming to the end of their life cycle? In which case, that's not going to be that attractive to a buyer. Or have you got a product which is just about to boom and take off, and you think, well, I've had enough, I can't take it to the next level, but maybe somebody else can do. So it may well be that you'll have a look at the products that you're selling. Is a lot of competition coming into the market? In which case it's potentially going to depress the value of the business. Or do you have are you one of a very few number of people in the market selling the sort of products that you've got. So you need to have a look at all the factors as to whether this is the right time for you to sell or not. We also need to look at who you're going to sell to. Are you going to sell to a company in a similar industry? They might want to diversify into your area, and therefore you can sell to them. Are you going to sell to a competitor? A competitor might want to take you out of the market because you're taking up too much market share. Are you going to potentially sell to them? Are you going to sell to basically venture capitalists who maybe want to build a business in 3 years' time and sell it for a profit? Could you sell it to your management team? And more on management team later on. But will your management team want to buy your business? They potentially have been in place for quite some time and they understand the business, they know the business, they know the ins and outs of it. So it may well be an option for that. Employee ownership trusts becoming more popular where you sell it to the employees of the business. Now, we've done a webinar on employee ownership trusts not so long ago. You'll be able to catch up on that on our YouTube channel. We're not going to go into that in too much detail now because we've already covered that. And then there's public listing, but again, that's a whole different issue and we're not going to cover that here today. So, preparing the business for sale, what do you need to do to get your business in the right sort of condition to sell? Well, the first thing people are going to want to see, if I'm looking at buying your business, I'm going to turn around and say, well, let's have a look at your accounts. Are your accounts up to date? Or are you still waiting for your accounts to be done 8 months later? We've got the 9-month filing deadline at Companies House. Why aren't your accounts done much sooner? So get your accounts up to date. And on top of that, you want to get some management accounts done. So you can, because management accounts will show that you're actually reviewing your transactions, your profitability, and the work of the business on an ongoing basis. So it's very crucial to have some management accounts. There is actually you can download yet another ebook from our website on management accounts. Again, just pop in your email address and download that. Have you done cash flow forecasts and projections? Again, if I'm looking at your business and I'm saying, right, I fancy buying your business, what's the future looking like? You're going to want to see that. So you need to have some sort of cash flow projections and forecasts, which are updated on a regular basis. Have a look at your profit margins. Are you making enough profit? Is your gross profit margin declining? In which case it's going to depress the value of the business. Or is your gross profit margin increasing? Or is it stable? These are all sorts of things that any potential buyer is going to want to have a look at. And then have a look at the 80-20 rule. So do 20% of your customers make up 80% of your business? Again, have a look at that, because if you start to lose 1 or 2 customers, you lose a heck of a lot of your business. Coming on to your customers. So let's review the quality and the quantity of your customers. Again, the 80-20 rule, we talked about that. Can you expand your customer base? Consider expanding that to a point where you're not so reliant on 1 or 2 particular customers. Because if I'm buying that company, I want to know that that customer is going to stay on board. And with a change of ownership, it may well not happen. You want to get rid of potential problem or unprofitable clients, unprofitable customers, pitter clients, as we call them, pain in the arse clients. And you've got to have people who you want to work with, who are going to make you profit, who are going to refer business to you, and so on. Have a look at how you charge your customers. Do you charge them an upfront fee for the work that you're doing? Are you on a subscription basis? Do you charge them on invoice? All these items, all these methods of payment can have an effect on the price. Because if I've taken a large upfront payment for a piece of work, that's got to be reflected in the purchase price and the sale price later on. Have a look at refunds and rebates. Many clients these days will give their customers a rebate depending on the amount of volume that they've put through the business. So you need to be aware, if you're buying the business or you're selling the business, there's a potential rebate going to one of these customers later on. Again, that can affect the position. Have a look at your suppliers. Do you have too much reliance on one supplier? So therefore, if that supplier goes down, you've got a problem with your supply chain. and the effects on that on price. So you maybe want to have a diversified supplier chain. That way, any potential suitor can play off one supplier against another to try and get the best price that's available. Your employees, you want to have a look at your senior management team, because the business has got to be able to run without you. This is one of the crucial things. Anyone buying your business is going to want to say, right, I don't want you there. You're wanting to get out anyway, and they don't want you there. So at the end of the day, you've got to have a senior management team in place to be able to take over and run the business without you. So any potential buyer can then slot in that senior management team into their setup, and they can just carry on as per normal. We've just got a little bit of background interference. Can you please mute yourself if you're not muted already? So again, senior management team is quite crucial. In effect, you want to be able to run that business any buyer will want to be able to run that business without you there. Have a look at employment contracts. Are your senior management team tied into good employment contracts, so that if anything happens and the company is sold, then they are tied into your business? Have you incentivized your staff? We could talk a whole load of webinar topics on incentivizing staff, but what makes your staff tick? Is it money? Is it vouchers for your local restaurant? Is it tickets to your local football team? My local football team's Manchester United, but that's not going to incentivize anybody just at the moment. But what is going to incentivize your staff? Have a look at minimum wage regulations. Are you complying with the minimum wage? Any buyer that's coming along is going to want to make sure that that's the case, because the threshold for naming and shaming businesses that don't comply with the minimum wage regulations is extremely low, in the hundreds of pounds. So the last thing any buyer is coming in is want to know they've got a problem with minimum wage. Are your employment records up to date? Make sure how you've hired and fired people in the past is all up to date, so you're not exposing yourself to any future issues. And are your employee handbooks up to date? Has anyone even read the employee handbooks? I know they're often in the kitchen in most businesses, but have anybody read it? So you make sure those are up to date and everyone understands what's actually in there. Have you got any contracts in place with suppliers, with customers? Are these contracts up to date? And do they include a change of control clause? So if the company is sold and the people running the company change, then do they have to maintain that contract? Is that a way of getting out of the contract? Do you have any statutory licenses and approvals which need to be in place? Make sure those, again, can be transferred over to the new company. For instance, are you governed by anybody, say Ofsted or CQC or the FCA? Are there any overriding regulatory bodies which you need to comply with, and make sure you're up to date and you don't have any problems with any of these people? Property documents. Does the business you have own property? Do you know where the deeds are? Do you know where your lease agreement terms are? Do you know what the lease agreement terms are? Do you know when the break clauses are? Do you know if there's an automatic right to increase the actual profit? All of these things need to be thought out, and make sure you've got everything in order before any sale. Have a look at your equipment and your assets. Is your equipment old or obsolete? Anyone coming in and buying a business is not going to want to spend a fortune upgrading the plant and equipment or replacing a load of plant and equipment. So make sure the stuff that you've got isn't at the end of its useful life, and it can carry on and continue to be used. Do you have intellectual property within your business, and who actually owns this? A lot of the time, the company might not own the intellectual property. It might be the individual who's developed that intellectual property who actually owns it. So who then has the right to actually exploit it? Again, these are all considerations you need to consider about getting things in place, getting things ready to be able to sell your business? Do you have a complicated share structure, or is it straightforward? Have you got a load of holding companies in place? We want to try and make it as simple as possible. I always try and keep things as simple as possible. So if I'm buying a business, as long as I can say, well, I'm buying it off these shareholders, then that's fine. Then that's okay. If I've got a whole load of complicated shareholding structures with A, B, C shares and with minority shareholders, and maybe you're giving some to crowdfunders, etc., it starts to make the whole deal a lot more complicated. So do you have a straightforward share structure? If you have, that's great. And finally, on this part, um, have you got any compliance issues with HMRC? Are there any skeletons in the closet? Is there anything there that we should know about? Anyone coming in needs to know about? Are you under a revenue inquiry? Or has that revenue inquiry been going on for some time and nothing's actually happened? When was your last VAT visit? When was your last pay-as-you-earn visit? What was the outcome of those? So you need to get all these things tidied up before your sale. The sale can go ahead in most cases and it can be accounted for in the part of the sale deal, but it's ideally you want to get these things out of the way first. So, valuation. What's my business worth? Often we're asked the question, how much is my business worth? What do you reckon I can get for it? The bottom line is really it's whatever anyone will ever pay for it. And you then have to manage your expectations. So you effectively, you think about house sale. You sometimes sell your house. You've got an idea of what the value of that house is. Someone coming along will say, well, actually, I don't think it's worth that. And you agree somewhere in the middle. It's typically much the same when you're actually selling a business. Yes, there are some parameters which you work towards, but the bottom line is it's what anyone will ever pay for it. So if you think your business is actually worth £2 million, but in reality it's worth £1 million, you've got to understand that. You've got to manage your own expectations to say, well, if that's all I'm going to get, then I'm not going to sell. I only want 2 million quid. Then maybe you're not ready for the sale just yet. You need to get familiar with the term EBITDA, and you'll hear this a lot when you're doing sales. It basically stands for earnings before interest, tax, depreciation, and amortization. And it's typically how a business is valued. So what you'll do is you'll take your profit and you'll adjust for interest, you'll adjust for tax, depreciation, and amortization, and you'll get to a figure. And you'll then look at a multiple of that figure. For small businesses, it tends to be anywhere between 2 times and 8 times that figure, depending on the type of business you've got. For larger businesses, it can be a lot more. Now, a lot of small businesses take their remuneration by a combination of salary and dividends. So you've artificially inflated your profit. So what we then do is we do an adjustment for a reasonable salary for the directors who are taking their money out by way of dividends. So you need to build that into the equation as well. It may well be that there are significant assets or significant cash in the balance sheet. Then again, that can be determined on top of the multiple. So say you've got a multiple of, I don't know, 5, and you've got a EBITDA figure of 200,000. Your business is worth £1 million. You might have another couple of 100,000 in the bank. You may well settle on a 1.2 million, something along those sorts of lines. Again, it can be structured any way you like, but there will always be these parameters which we're working towards. And EBITDA tends to be the beginning of that valuation and how you do it. What we will do, though, is you will get an independent valuer in to value the business. We can probably give you a very brief desktop valuation to give you an indication, but at the end of the day, you will want an independent value to come in and actually value that business. Because if I'm coming in to buy your business, I want to understand what it's worth, what an independent person has actually come along and said what it's worth. So what is actually going to drive up the value of the business? Because we want to groom your business for sale. We've got a couple of years we want to get out. So how do we, over the next couple of years, drive up the value of that business? Well, we want to make as much profit as possible. because if you can, as you can see, it's all based on a multiple of EBITDA, multiple of your effective profit. So if we can make more profit, we're going to make more value out of it for yourself. So make the business attractive to somebody. Have you got a great local image, or are you always in the papers for something that you've done wrong? Have you got a great reputation in the area or in the country for doing what you're doing? Have a look at the market forces that apply in your area. Are you innovative in doing what you're doing? Are you always at the forefront of technology and driving through new processes and new systems? Try and increase the profit. Make sure you're making as much profit as you can. So it might be a combination of, I don't know, increasing your prices, increasing your margins, reducing your expenses to such a point where you're actually making a very good profit. A lot of this can be done by marginal gains. Happily talk to you about that. It may well be that a competitor wants to take you out of the market. We've seen this with one or two clients where they're saying, well, actually, you're coming in, you're disrupting the market. We want to take you out to get back to the sort of profits that we were making before. That potentially will drive up the value of the business because it's worth a lot more for you not to be there than for you to be there. Are you based in a great location, or are you in an area which makes life difficult for you? Do you have a very senior management team in place? Again, we're coming back to this SMT, senior management team position, to make sure that the business can continue without you. At the end of the day, you don't want to be there. They don't want you there. You want to retire. You want to get out. There will be a period of which you will be a handover period. We'll come on to that in a minute. But at the end of the day, the senior management team should just slot in to the new owners, and they can carry on running the business. Have you got a great product range which is out there? Or is it the product range which is old, it's coming to the end of its shelf life? Are you having new products being brought into your business the whole time? All these things can drive up the value of the business. Excuse me. So how do you actually market your business? Well, this is where it starts getting important with having an information memorandum, an IM. The reason we prepare an IM is to show that you're actually serious about selling your business. And also it will save you a heck of a lot of time because you can have it all in one place, all the typical contents that you can see on this screen. So you will have the history of the business, you'll have all the financials, what facilities, customers, competitors, all the products and services, the plant and equipment, employees, supplier, and all any outstanding litigation. That's typical contents of an information memorandum. So if I pick that up, I get a brochure which says it's got all that information in. I can see, well, actually, yeah, you're serious about selling your business. I've got a load of information. I don't have to go back to you to ask you loads of questions about common stuff. It's all there to start with. And it starts as a basis to say, well, listen, this is a business that we're selling. This is the typical information that's there. You don't need to start asking us all this because it's all the information is in front of you. It also potentially can rate yourselves amongst your competitors as well. So any competitor will probably want to see this information anyway. So it does give them an opportunity to have a look at that. May well be that you want to get a non-disclosure agreement in place before you actually start sending this information out. But that we can cover in a second. But it saves time in the long run. You can deal with multiple prospects at the same time. It communicates the value of your business as well. It shows you do have an intention to sell. You've gone to the effort to prepare this information memorandum. It's got all the answers ready for potential suitors, and it is a starting point for various discussions. Excuse me. So it is quite important to get some sort of information memorandum ready. We've talked about other things to consider, and we've also talked about a non-disclosure agreement. We don't want to make too much information publicly available, so you get people to sign this NDA, and then again, it can restrict the amount of information that's actually in the public domain. Once you've decided to sell, or you've got a potential buyer, they may well want to start doing some due diligence. So what is due diligence? What's involved? It's basically the buyer's opportunity to go into in a lot more detail all your records, whether that's be your accounts, your employment records, your history, your customers, your sales information, and so on. Gives them the opportunity to say what you've actually said in your information memorandum actually is the case. And depending on how complex the deal is, will depend on how much due diligence is involved. So typically they will request certain pieces of information. They want to have a look at contracts. They might want to have a look at your sales volume by customer. They may want to have a look at your purchase volume by supplier. And you will share this data between you. Can be very time consuming, but at the end of the day, it is very important to part of the deal. So if you put yourself in the buyer's shoes, you will probably turn around and say, well, I'm not too sure what I'm getting until I actually have a great deal more information in there. I've had the information memorandum, that's piqued my interest. Now let's go in and have a look and see what else we need to do and what more information I need to have. So it is quite a lengthy process. There will be meetings backwards and forwards. Each person will appoint their own advisors. So you'll have your own advisors, you'll have your own lawyers. So you have your lawyers looking at contracts, you'll have your own accountants looking at all the figures and so on. So there is a cost in mind. It's a cost to bear in mind. Then you start negotiating the deal. You come to that. You come to the end of the you've come to the end of the due diligence process. You may well have done a heads of terms agreement to say we're looking to sell, you're looking to buy. We have a more or less figure agreed in mind. This is the intention. You might want to give an exclusivity period to the people who are buying it to say, right, we won't take any more offers. We'll give you maybe 6 weeks to have a look at this. And if you're happy at that point, then we will not get involved with anybody else. So you want to have a figure in mind. If your figure in mind is 2 million, I want 2 million quid from a business, or I want £1 million or £500,000 quid from a business. What is the bottom line figure that you have in mind for your business? You also need to decide where to hold the meetings. It may well be that you hold meetings virtually, like we're doing here on a webinar, or you can hold them in an office somewhere and you negotiate between you. What happens if the deal stalls? Well, you want to have time to go away and think about it. Don't get rushed into signing anything if you're not ready to go ahead. If the deal stalls, there may well be some mediator will come in and come to some agreements on what to do next. But at the end of the day, it's down to you to say you're in the driving seat. You're saying, well, actually, I'm not quite ready to sell for this point. It's not quite what I wanted. Maybe if you offer this or make some adjustments to the deal, we may well go ahead. Have some time limits to the whole deal as well. So don't let it drag on forever and a day to say, right, if we're going to do this deal, I want it completed within the next 6 months. And I'm going to give you 6 months to do it. After that, then it's off the table. And always be prepared to compromise. No one wants to lose face on this. You say, I want £500,000. They say, no, we'll give you 250,000. You say, well, actually, let's agree somewhere in the middle, but have a bottom line figure in mind. Bear in mind, you can only do this once. You get the one chance of being actually able to sell your business. So you want to get the maximum value out of it that you can. So if you do want to hold back for a bit, feel free to do so. So how much is the whole process actually going to cost me? And the answer to that is it depends. You're going to have accountants' fees. You're going to have lawyers' fees, which always tends to be more than accountants' fees. Why, I'm not too sure. But anyway, you might have an agent who's dealt with the business as well. You might have gone to a business agent. They're going to take their cut. And typically each side tends to pay for their own costs. So your buyer will pay for their costs, their lawyers and accountants, and the seller will pay for their lawyers and accountants. But don't scrimp on it because you want to gain the maximum value. So having a good person dealing with your sale will potentially increase the value for you as well. But it can cost a lot depending on the amounts involved of the sale. If it's a small business, it might not cost very much. but you're talking potentially thousands to tens of thousands to how much it costs. If you're talking millions of pounds, it can go into hundreds of thousands as well. So just bear that in mind. But each side will typically pay their own costs. And then you come to the sale. You've done it. You've sold your business. Fantastic. You've got what you wanted. You've followed the whole process. You've prepared for the sale. And now you're in the handover position. Well, have you negotiated some sort of handover? Are you saying, right, I finished on Friday. I'm not turning up on Monday. That's it. I'm out of the business. Typically, that won't happen. There may well be a handover position, maybe 3 months, maybe 12 months. You need that smooth transition to happen because it's in your interests to ensure that the business transfers over smoothly. It may well be that the deal you've negotiated is so much up front and the rest over a period, depending on meeting certain targets. You want to make sure that those certain targets are met to get the maximum value out of it. So again, a smooth handover is very important. Negotiate your own position going forward to ensure that you get what you want out of it during the handover period. Typically, they'll pay you a decent salary and you'll have certain targets to meet and so on. You might want to inform the market, send out a press release. Maybe it's just for the local area if it's a small business, maybe nationally, depending on the type of business that you're in. And make sure you get your personal terms in place. There we go. Those horrible 3-letter words, tax. There is capital gains tax to pay on the sale of your business. So if you're selling the shares in your business, which typically is how we've been basing this whole scenario on, is you sell the shares, you get what's called business asset disposal relief. It's the old entrepreneur's relief. For some reason they called it bad relief, but anyway, you get bad relief on the first £1 million at 10%. So that's per person. So if you sell your business for £1 million and you knock off the costs, so that'll be your lawyer's fees, your accountant's fees, any agent's fees, the balance will be paid at 10%. If you sell your business for 2 million, you'll have the first £1 million of gain at 10% and the rest will be at 20%. That's again after costs. There are certain conditions you have to comply with, so to make sure you actually get the business asset disposal relief. So seek professional advice to ensure you actually meet the conditions for this. And again, it's something, if you're preparing to sell in a couple of years' time, you might want to get right now because one of the time limits is 2 years. So again, have a think about, are we set up ready to get the business asset disposal relief? So tax is a big one. If you're selling the trade and assets out of your company, then it's slightly different in as much as you're not actually selling the shares, you're selling the trade and assets. The sale proceeds will form part of your profit for your final period of trading. Those will be taxed at whatever tax rate the company pays, somewhere between 19 and 25%. And then you've got to get your money out. And typically, you will get a liquidator to come in, liquidate the company as a solvent liquidation, and then you'll get your money out again using the bad relief rules. So it depends on actually how you sell your business. And finally, have a think about what you're going to do next. Make a plan. Have a look at what you want to do. It's very difficult to go from working at 100 miles an hour to stop overnight. And it can typically take a great toll on your health. So have a look about what you want to do. Have a vision for your future. We've got some pictures on the screen there, people going on holidays, lying on the beach, doing some pottery and so on. But what is your plan going forward? Do you have one? Do you gradually want to reduce your working hours, go from 5 days to 4 to 3 to 2? So you make a gradual reduction, exit from the business, but always have a plan in place because the last thing you want to do is not be able to enjoy the funds that you've built up in the business and enjoy your retirement. So make sure you have a plan about what you're going to do next, where you're going to go, what you're going to do, and so on. So as you can see, we have covered quite a lot in the last 40 minutes or so in relation to selling your business. There is an ebook on selling your business, which you can download from our website, which has got all of this information in. Feel free just to pop in your email address and you'll be able to download that for free. And it covers much of what we've got gone through today. If you want to discuss this in more detail, please feel free to drop me an email, give us a call, and we'll happily chat it through with you. We deal with a number of disposals each year, as well as acquisitions, so we do have the expertise and knowledge to be able to run through this with you. So, has anybody got any questions that they want to ask? Just having a look at the chat box. Will these slides and recording be available after this presentation? I can't take notes quick enough. Yes, it is. It's available to everybody on our YouTube channel later on. We'll download it and put it on there. And you'll be able to send a copy of the slides over to people who want them as well. There is a link to the recording. We will send that out. Does anybody else have any questions that they want to ask? Please feel free to unmute yourself and ask questions. We've got 31 people on the call so far. Please feel free to do so. Give us a shout. Yeah.
It's Ian. I've got a question. Typically, if you're looking, if you've agreed a deal that is actually an earn-out,
Yes.
how long is a typical earn-out period?
The answer to that, it depends, but typically I've seen them ranging from 12 months to 3 years. They're typically over that sort of period. It depends on how you negotiate the best deal that you want. If it's an earn-out, they're going to want to see the results of that earn-out. So typically it will probably be in the region of a couple of years as an earn-out.
Okay, thank you.
Anybody else got any questions they want to ask? No? That's great. Let me just see if there's any more questions come through in the chat box. Apologies, I missed the first 10 minutes. Did you cover management buyouts? Yes, we did. You might want to just have a look at the recording, Sally. We talked about selling it to your management team. We talked about employee ownership trusts. There is a separate webinar on employee ownership trusts. So please feel free to have a look at that on our YouTube channel. So there is stuff on there as well. If you want to talk to us about it in more detail, please feel free to give us a call. Anybody else got any questions?
Stephen, it's Richard Gray. Can I ask a question?
Yeah.
Thank you. After you've sold your business and you've paid your tax, your business asset disposal rates, you're left with a lot of cash in your estate then, aren't you?
You are.
Is there anything you can do about that?
So potentially then you're saying you've got a load of cash and
exposure to IHT.
Yes, you've got exposure to inheritance tax. Yes, there is quite a bit you can do. It's a whole extra topic on how we actually escape inheritance tax. There are lots of ways of doing it. There is the use of trusts. There is the use of gifting relief. If you gift some of the money and survive 7 years, then potentially there is no inheritance tax. You've got your certain limits as well, depending on the amounts you're talking about. We had an exact conversation about this with a client 2 days ago, and we gave them some great inheritance tax ideas. If you want to come in and have a chat about inheritance tax, that's fine. Just give me a call and we can arrange to have a conversation.
That's very kind of you. Thank you. Oh, by the way, do you know why lawyers earn more money than accountants? As I'm a lawyer. Risk. It's risk.
It always seems to be that lawyers earn more money than accountants. Don't tell me why.
I wish. Give my regards to David Taylor. Thank you.
I will do.
Thank you.
Anybody got any more questions? Great. I'm going to stop the recording there.